I was able to make over $300 yesterday on this trade using the market structure. And in this video, I am going to simplify the market structure so that you can be able to take massive trades like this effortlessly. If you are new to the channel, subscribe. I have a free mentorship program. Link will be in the description. Let's jump into the video. So step number one is the weekly structure. So the weekly structure begins on Monday. So Monday sets the high and the low of the week as usual. So once we have the high and the low of the week, we have our main structure because everything else will be working off of the high or the low. When Monday sets the high and the low of the week, we sit back and wait for price to come back to either extreme. So in our case, price breaks out of the high of the week. Now, once price breaks out, it can come back into the range or close outside of the range. This is when the day closes. So assuming this is Monday, when Tuesday breaks out and closes inside, this is something we call a failed breakout. So this is our next structure. A failed breakout is a signal that the next day we are going to have a sell setup if it's at the high. Or a failed breakout at the low is telling us that the next day we will be looking for buys. Simple. That is the weekly market structure. Another thing, when we are selling at the high, our target is the low of the week. So when we are selling and we come back to the low of the week, then this changes everything and now we are looking to buy. So keep that in mind. Now, the high of the week also is where the most liquidity throughout the week is. And this is where all the time frame traders are playing. This is where the big boys play. So we also have a setup where if we clear out this liquidity, then we can look for the reversal setups back down to the low of the day, low of the week. That is all about the weekly template. So let's break down this trade we got on the New Zealand dollar yesterday. So Monday sets the high of the week. Tuesday breaks out and closes outside of the range. Wednesday breaks out and closes back inside, giving us a failed breakout. So a failed breakout at the low of the week, what does that tell us to do the next day? It tells us to buy next day. Now, as we were looking for buys, price came back to the high of the week and triggered this liquidity. So once we have this liquidity triggered at the high of the week, then our bias changes because obviously now it's time for us to reverse back down to the low of the week as the price moved, and as you can see for yourself. If you are already getting value from this video, click that like button because it helps with the algorithm and it makes you the coolest guy in the world. That takes us to the next step, which is the daily structure. Now, the daily structure is composed of the high of the day. That is where the most liquidity throughout the day is. Now, if we are looking to sell, we want to sell high at the high of the day, not inside, but outside. You want first the liquidity to be triggered. And in our case yesterday, the high of the day in our session, which was the London session, was also the high of the week. So we have a lot of liquidity at the high and the low of the week. So what exactly are we looking for? That takes us to our next step, which is the liquidity sweep. Now, keep in mind, we don't trade any time of the day. We have a specific timing window. Asia is 8 to 11 p.m. New York time. And then London is 2 to 5 a.m. New York time. And then New York is 8 to 11 a.m. New York time. So in our case, we got our setup in the London session. So what we do is highlight the trading window so that we know when to start and when to stop trading. The second step is, so let's do it in live time from 2 a.m. So we have from 2 to 5. Now, the next step is we let the first hour close. We don't trade the first hour. We want to see how the first hour behaves. So, first hour up to 2:45. Price does not do anything. It's just consolidating. Now, if price does not break out of the high or the low, then we just do nothing. But if it breaks out, we adjust the high to the new high set in the first hour. Now, this brings us to the liquidity sweep. The liquidity sweep is a one candle breakout on the 15-minute time frame. So how does that look like? Do you see this candle? This candle is the liquidity sweep at the high of the week. So how do we know it's a liquidity sweep? We look for this pattern here. It's a 1, 2, 3. This is the pattern of a liquidity sweep. And it's this move 1, 2, 3, this breakout. Now, what confirms that it's a liquidity sweep is if the next candle closes bearish. And you can see this is a hammer or a hanging man. I don't know. I'm not sure. But this is a bearish candle after the breakout. So a 1, 2, 3. 1, 2, 3. The next candle is bearish. So this confirms that this is a liquidity sweep at the high of the week. Now, that takes us to our next step, which is the 1 minute time frame structure. And how do we analyze the 1 minute time frame structure? So we just look at price action. Price is creating higher highs. This is the breakout move. Then price started creating lower lows. Then we have started creating higher highs. So for us to actually get into a reversal, we must see first lower lows being created. And how does a lower low look like? So we want to see, this is the most recent higher low. So price is creating higher high, higher low, higher high. We want to see this low being broken. So what happened? So price breaks this low. So this is our first indicator that this uptrend is almost over. So long as we don't break this level, then we are looking for an engulfment candle to seal this deal and give us an entry. So what happened? That is our engulfment candle. And defining an engulfment candle, it's very simple. It's a candle that's bigger than the previous candle. So the previous candle has wicks. So the engulfment candle must be bigger than the candle and its wicks. In our case, this candle had no wick. So that was our entry. We have our stops above the high of the day. And then we are targeting the low of the day. Now, this was a very massive move. It gave us about a 10% return on this one single trade. And so this market structure is the recipe for actually catching these big moves from the high of the day to the low of the day. So this is the low of the day here. So our entry is there. It was a nice setup, and then price just continued breaking down, and it's continuing to break down even on the next day back to the low of the week. So this covers the way that I analyze the market using only the market structure. And if you'd like to learn more about this strategy, I have a free mentorship program. The link will be in the description. Check it out. And if you got value from today's video, subscribe, and I will see you in the next video.